In today's video, we're going to do a quick run through two of my portfolios, the Investengine, which was last year's stocks and shares ISA, and my new stocks and shares ISA, which is not on Trading 212. I had done a video on this recently, and I'll link it up above and sets out why I've made that decision to change. Welcome back to the channel, and if you're new here, hi, I'm Mark of Desperately Seeking Fi. Just before we jump into the portfolios, let's have a quick look at what's been going on the last couple of days in the markets. 3rd of May, we had the Fed increasing the interest rate by 0.25%, and that moves them up to 5.25. And it looks like, well, they were signaling that this might potentially be the end to the rate hike. What did the US markets do? They nosedived. We have seen a drop of about 2.5% in the S&P 500. We're also seeing red on several of the other different markets in the US. So let's jump in, have a quick look at how things are looking in my ISA for 22-23. So all in all, this is up about 1%. And what do I hold within this portfolio? This is very much a focus on dividends and anything else with the IUKD, the VHY, and the FTSE 100 all being big dividend paying ETFs. For a bit of growth, I've got the BUSA in there and also HMEF, the HSBC Emerging Markets. The only one that is up out of all of those is the FTSE 100. In reality, it is very heavily weighted to the UK, and last year, as that just showed, the UKE FTSE 100 is the only ETF that is actually up for this period. What am I actually invested into? Industrials and financials making up the most of that, with technology coming in third. And then holdings, BATS, HSBC, and Rio Tinto, Shell, and Vodafone all coming in with the highest weightings. And that's just pointing towards the fact that this was very much a dividend focused account. And while I say it was a dividend paying account, none of those paid any dividends in April. They were all towards the end of March that they'd paid out dividends. Let's jump across quickly to Trading 212. I have two accounts here. I have the Invest account, so the general investing account, which still has money in it from last year. And then I have started to move money into the Trading 212 ISA account. Very quickly, just have a look and see how red the Invest account is looking. In the monthly dividend account, we are just under 2%, and Toby's Pie is running at about 1.8% up, so he's relatively happy with that. On the holdings within this account, who's doing reasonably well, we've got Tesco's up at 23%, National Grid almost 15%, Persimmon up 7%, whereas we have a few fallers. British American Tobacco has fallen, but it's just paid a dividend, so it's going to have taken a dip on that side of things. Primary health properties down at about 7%, and a few of the others just break even. I'm trying to figure out what I'm going to do with this, whether I'm going to sell out of these and move everything into the tax wrapper within the ISA. Let's jump across, have a look at the ISA. I actually have some Legal and Generals. Bought 40 shares of this earlier on in the month. It's taken a bit of a hit recently, possibly a bit of knock on from all of the issues in the US with more regional banks collapsing. Let's go and set up a pie. And what I want to do is add a few ETFs to this. And what I'm trying to do is sort of get a balanced world set up for ETF coverage. I could just go and do a VWRL and just buy the Vanguard All World, but that comes in at a ongoing charge of about 0.22%. So what I'm going to do is build something else that will come in at less than that. So you're going to have S&P 500 and emerging markets, FTSE 100, and a developed Europe X UK. I'm going to go and find those and we'll build the pie. I've set up the pie and I seem to have ended up with Vanguard even though I wasn't trying to. What I have done is I've gone for distributing on all of these because I like to see a dividend coming in and be able to then reinvest that back into this pie. What I have done is I've used Investengine, and what it allows me to do is go in and see what my ongoing charge is. So this is going to be at about 0.09. What it also allows me to do is go in and see what have we got in here. When I put it in at this weighting, I get a rough idea of where the balance is across the world, and this is something similar to VWRL's breakdown, or where the wealth across the world is. You can see that I am very much into the industrials and into technology and then finance at much higher levels than I was in last year's more dividend focused approach. And if we have a look at the companies that are making up the top 10 or so in this, these are all the big FANG companies. We do start to see some of the bigger dividend players coming in with the Shells and Johnson & Johnson, ExxonMobil. There is a little bit of balance on that. There will be some money coming in dividends through here. But what I'm also going to do to complement this is probably this month I will start to invest into some dividend stocks as well, but the majority of the money will go into this ETF portfolio. So let's go next. And let's do manual because I have some money sat there. Let's do an invest. Invest £500 into this. That's showing you what the breakdown is going to be for those. And let's hit confirm buy, confirm. We are sat outside of ours on FTSE. So tomorrow morning we will get this going through and then we'll see where we actually are. That's just a quick whistle-stop tour through the last year's stocks and shares ISA and then setting up a new pie for the 4 ETFs that I've gone for to get a bit of balance across the world. But why don't you have a look at this video that's going to give you some ideas on dividend ETFs that you could be investing into. So thanks very much for watching and I'll see you in the next one. Cheers, bye.